Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to be talking about Euro US dollar and what levels to watch out for ahead of the FOMC meeting in minutes. So you can see that we've actually had some data out already today from the US, which was PPI, which came in substantially higher than what was forecast and above previous expectations. So data's looking good. Still looking hot here for the US dollar. We've even seen other Fed members talk about the need for the Fed to hike rates more aggressively. The labour market showed slowdown last week on the NFP reports, but there is no signs of the data that is affecting inflation slowing down. So interesting that we've got CPI coming out tomorrow, but are the Fed going to put something in place tonight in the meeting minutes that are going to suggest that they are going to hike rates more aggressively? Now, what I've marked out here on Euro US dollar is a couple of levels of interest, because ever since the past couple of days, all the market has done here is range. So if I just grab a pencil, you can see here that we've traded in this tight trading range between the 0 spot 97.70 and the 0 spot 96.70. So a nice 100 pip range that price is moving between at the moment. Now, what we're going to look at is, if price favours one thing, where could price go to? Now, if the market sees that the Fed needs to hike rates more aggressively, the Fed come out and say that they have to try and get a grip on the rise in inflation, then we should see a break below 96.70, which then could see a move towards 95.50. If, however, price doesn't do that and we break above the 0 spot 97.70, then the next stop for price is going to be the 0 spot 99 handle. Now, what we may get is a little bit of fluctuation on the event. So let's say the Fed come out and say they do want to hike rates more aggressively, but price pushes to the upside, breaks this high, and then closes back within. That could be a little bit of a shakeout of these people that were short already before the event, and then that could also lead to a little bit of downside. Same if the market come out, if the Fed come out and disappoint, which could be a possibility. The Fed could turn around and say, no, we're sticking to current plans. With the data suggesting that we can do that. Then we may get a break below the low here, close back within the range, and then the trade to the other side. The thing is to keep in mind that these two highs and lows are very important. So breaks above 97.70 and closes above that level will be significant to see a move to 0.99. If, however, price trades below the 96.70, closes below, that could open up selling pressure towards the 0 spot 95.50. Just going up to the bigger picture, we can see that we are still technically in this weekly downward trend. We formed an aggressive sort of pin candle last week. If that momentum does continue, then the likelihood is that the 0 spot 95.50 handle could be tested fairly soon. A breakout of this channel could mean price is going to move way up towards the 10 spot 35 handle, which would be quite a large move. However, don't see that happening right now. I think, sorry, looking at the data, we are looking at a very hot US economy still. So could we see a little bit of a continuation of the downside for euro dollar? Either way, volatility is going to be high, so please take appropriate action regarding that. Hope you enjoyed this video update. If you did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content. And I'll speak to you in the next video.